Hey there, everybody. This is Bob. I got my good friend Phil with me. We're with Trade Genius. This is our podcast on Saturday, and we want to talk about monetary illusions. Phil and I have been talking for a long time about things aren't as they appear to be, but now things are happening that are setting up some really profitable trades. Stay tuned. You're not going to want to miss it.
Trade Genius.
Hey guys, really briefly before we jump into this video, appreciate all the likes and subscribes, and if you can ring that notification button, that really helps us out. In addition to that, if you guys don't mind, head over to tradegenius.co, check out our specials we have over there. There's a number of different specials with different packages for all different experience types. If you're more into education, we have a package for that. If you just like to get into the room, primarily, we have a package for that as well, where you can see where we're calling out trades and things like that live, and also posting signals into our Discord signal rooms. So check it out, tradegenius.co. Appreciate you doing that.
So Phil, today I want to talk about oil, but I want to let you lead in, and I want you to talk about what happened on Friday, because it looked like a goldfish trying to get oxygen and failed, and how these trades set up, and they were just beautiful. So I'm going to throw it to you and have you explain this chart.
Yeah, so let's transition over to the chart here. So this is a chart of the ES E-mini. A lot of us during the day are going to be trading this instrument just because it's liquid and it moves around. Especially these days, they've really turned the S&P 500 into like crypto type moves with all the 0 DTE leverage, which is good for volatility and good for trading. Bob, I think you remember we'd sit through summers where they would move like 2 points in 2 hours. That's, that doesn't happen anymore. So I think they accomplished their mission of getting the volatility in this market that they wanted. But that being said, you're getting bigger moves when you get a signal, which is great because then you can target more profits. And that's what happened on Friday. We went up, everything was trending up. And then all of a sudden we got our sniper cell and our Kona cell. These are two, for me, that's two of my favorite signals that we have. This is part of the trader's toolkit that's coming out. And it basically just signaled the top of the move, essentially. This is on a 15-minute chart. It also fired on a 5-minute chart, which is an entry I took. And most, I think, that were in the trading room hopped on this move. And it was just a beautiful move. And one of those moves where you could simply just trail down your stop over the top of the candles. And we ended up closing out toward the lows of the day into the end of the day. So, but this combo of the signal, when you get the Kona and the sniper, now one by themselves, they're good, but when they're together, I mean, it's just like, that's when if that's going to do your max size, that's when you do it. Very, very high probability trades. And they'll come in and you think, oh man, this doesn't seem like the right thing to do here, but it plays out. It's a very powerful cyclical signal. And you just have to just be a robot and take them because the probabilities on these trades are very high. And usually they result in a pretty sizable move. It's not just like, you get a signal and you get a couple points. No, this is like, these things will signal minimum 5, usually around 10 points. And like in this case, I think this was like a 30+ point move down. So they're very powerful, but we want to show you guys, it's very simple. That's, you have a couple indicators that pop up that tell you, hey, the trade's here and you take it. So anybody can do this. It comes down to just being able to follow the directions. We've got training videos that go with this stuff, and it's very doable. It's not rocket science.
Yeah, and Phil took the futures and I took SPY options. So there's a lot of ways in which you can play this, but and the indicators work on everything. And like I said, all we look for is that we look for these range breaks. We look for these our algorithms to, especially when they're together, Phil. They're just awesome. Mm-hmm. And normally on a Friday we get what's called a gap and camp. This thing ripped up and it just stays there the rest of the day, right, and just punishes people who are wrong. And when this thing rolled over, I think it was telling us something. I think some things are happening. And what I want to do now, though, Phil, and we're going to talk more about ES next week because I think we're going to see some more bearishness come in. We had 3 red days in a row, by the way, guys, on Wednesday, Thursday, Friday, red on the broad market. But I want to talk oil. I'm going to be positively negative on oil today. So Phil, if you want to throw up that oil chart that I want to show everybody and just so people know while Phil's getting that transitioned over, is that I'm short tech and I'm long energy. And I've been steadfast in this, and the down moves have not been down that much, but the up moves are pretty sharp. And what's happening here is just like everything else with the Biden administration. I feel like one of those magician guys guys. They've been suppressing the price of oil, suppressing the price of natural gas, suppressing the price of gold, suppressing the price of silver. All these things you can measure and draining the SPR. They're desperate to keep inflation from blowing up in their face, and they still can only get it down to 5% because Janet Yellen is raising the money supply by 5% a year, and the Fed's not taking away the punch bowl. So what's happening now, though, is that we have in the Permian Basin of Texas, production has fallen off a cliff, okay? And we are the marginal producers of oil in the world. So if we back off our production of oil, you're going to see OPEC and Russia being able to take control of the supply situation again. And I think the really smart money, and you got to remember, the people that are shorting the oil market aren't all sitting in Houston, okay? They're in London, they're in the Middle East, and they're backing off their bearish positions, Phil, like crazy. Just like what happened to us with the big short squeeze we just had in the markets. The CTAs were massively bearish and short, and they got their heads handed to them. Well, we reached a point again where when the level of short interest reaches a point and it starts to roll over and it hits this magical line, you guys can read it in the charts itself. You get a 60-day move higher in oil. And we've seen it in March, and I'll show that in a second. And we're sitting up again. And our viewpoint is that we're going to be $85 to $90 oil by the end of summer. And so it's setting up a beautiful opportunity for energy. And Phil, and I'm going to let Phil talk for a second here, is that energy is the last to go. So I'll eventually go from being an energy bull to an energy bear. But I think we have one more pop here. And this thing's setting up just like the 1970s all over again. Phil, I'm going to show one more chart, then I'm going to let you throw in on this because you have some opinion on energy and the macro view too.
Yeah. So as far as like oil and let's say the inflation fight, this is a big problem. Okay. And we have the Fed who looks at core PCE, which conveniently excludes energy, which makes zero sense to me and Bob and probably to you too, because, just about everybody uses gasoline in their day-to-day lives. So in reality, what's going to happen is core PCE may continue to drift lower and the Fed may declare victory against it. But in reality, CPI, right, that's the one that includes everything. And that's going to be continuing to grind higher. And they can exclude energy all they want, but at the end of the day, if everyone's paying $5 gas or higher, depending where you live, that puts a dent in everybody's budget and affects the consumer. And as we showed you guys yesterday, the consumer is already, hobbled big time. We're seeing consumer data that's in the toilet and down in big time recessionary levels. So this is going to also be a big burden in that regard, and it's going to further the recession chances that we're going to. Personally, I think we're already in one based on the data that I'm seeing. I know, like here in Hawaii, tourism is down. Before the rental car agencies used to be just gangbuster busy. They're saying the guys that I know that are working there, they're saying it's slow. This is stuff that you never heard of in the last couple of years with all the COVID stuff that was going on. Bob, I know you said in your neck of the woods for the first time in eons, it's slow. So I think we're starting to see it, and we see it in other things too. Sales data, advertising is down. So things have changed, and I think we're starting to finally see the tide turn a little bit in the markets as well. But to your point though, with oil, I 100% agree. It's going to go up. If we do go into that recession, to what you were saying about oil being the last to come down. So that might mean, let's just say if we go into a recession in Q4 of this year and it runs us into some quarter into next year, 2024, that's very hard to tell exactly how long that's going to take because we just don't know. It's a fluid situation. But oil, once that oil drop happens, and let's say it goes back down to 60 or whatever, maybe even 40, that's going to be a huge indicator that, bear market's done. Maybe we go sideways, but the pain's over at that point. And you better start looking long-term at your portfolio. So we're talking many months out, but I think energy has a very good run. Because remember, energy holds up really well during the initial downturn of the recession, but it's the final thing to go and everybody capitulates, right? And everybody's broke and you can't afford to fill up their car, I guess. But yeah, so I think it's an awesome trade going into that. And then knowing that game plan, then you can also take advantage of before it drops and then pick it back up again.
Yeah, and I think, we're going to follow this along a little. It's amazing. We spend most of our time, Phil and I spend most of our time just digging for data. I feel like we're your personal librarians, but there's so much information out there. And the problem that we have, there's a difference between data and information, right? Data is just collection of information that's raw. But when you get information that you can back test and find out that it has some causality and some correlation, you can make some money on that. And so, we're seeing it now with the derivatives, and derivatives are all we have anymore. You can forget fundamental data. You can even forget a little bit of even technical data. It's just that when you have these outliers, like I'm showing you right here, is that you have to react to these trades. So this is showing what happened the last time oil made an $18 move higher. This is the CTAs. The curve, what backwardation means is that as the price of oil goes out into the future, you price trends down. So there's always a little bit of angst in oil that is holding the near-term contract higher than the future contract. It's like the opposite of what happens with VIX, right? The volatility index goes up over time because the future is less knowable, right? And there's more opportunity for surprises. But when you get a situation where you're in the normal backwardation and all of a sudden you see this massive short position being put on, it's like whack-a-mole, Phil. And these guys are going to get hammered.
Yeah.
And so this was an $18 move. Those guys lost money when they got positioned this way. Well, guess what? They're positioned this way again, Phil. So we're expecting a move higher. And, and Saudi Arabia is insistent on taking control of the oil markets again. And you have the United States really holding back production. So we have a perfect storm here, looking for a 20% move higher in oil. That's going to basically lift the CPI into the fourth quarter. And it's just going to put constant pressure on the Federal Reserve here. And people are going to realize that this guy's not cutting anytime soon.
No, I agree. It is odd to see this much short positioning when futures are backward in backwardation, because most of the time futures are in what's called contango, right? Where the futures contract, which is usually like a month or a quarter out, is pricing in a higher premium usually than the actual spot price, in this case of oil. Now we have a case, and it's not often that this happens in any market, where the future prices are actually pricing in lower. So when that happens, a lot of times people will be like, look, when futures goes back into backwardation, we go long, because it's very short-lived phenomenon. So the fact that you have a bunch of supposedly smart money going or positioned this short actually amplifies what will likely happen, as Bob was saying. I mean, you already have short positioning in the market that's already telling you a $20 move. This is going to throw gas on the fire. I think you might actually have a more explosive move back up, given where for some reason everyone seems to be left-footed on this trade here. I'm not sure why they are short in this condition, but they are, so you can take advantage of it.
Just like why gold, sometimes, and you tell me, Phil, more than anything else, say, Bob, why is not something that you should be concerned about in trading? It's really what, because you can wire yourself right out of a portfolio. And so it's interesting. And when oil goes into contango, there's another beautiful trade too. So when it goes back into contango, we'll share with you on a podcast where you make a whole lot of money, not even trading oil, but trading something that goes along with oil. That's a really good opportunity. So we'll save that for when oil goes into contango. Phil, that's all I have today. Guys, if you want the Trader Toolkit, what you're going to pay for it would have paid for itself over 2 or 3 years for that one trade. I mean, you would have invested $2,000 into 10 SPY contracts over the whole day of margin, and you'd have made 200% of your money for the day, and you would have paid for the toolkit, years and years and years in advance. So these are great tools, and we're definitely going to raise the price of it. So you better get it while it's still at the current price. And we know these things are working. And as this market gets to go two-way, we're going to be on Love Island, guys. It's going to be a lot of fun. We're gonna make a lot of money with this two-way market that's inbound. So with that, Phil, enjoy the rest of your weekend. Everybody else the same. Hit like, hit subscribe, hit the bell, and tell your friends.
All right, guys, let us know your thoughts below. We'll talk to you later. Bye-bye.
Trade Genius.